The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And as we start a beautiful Thursday, August 30th, at the headquarters of Technical Trading and Investing, TFNN.com, we celebrate National Toasted Marshmallow Day. The history of the marshmallow dates all the way back to ancient Egypt. The Egyptians harvested the sweet, gooey extract of the mallow plant and used it to make candy. It was a very special treat reserved exclusively for the gods and royalty. The current marshmallow, as it is, dates back to about 1920. But on this day, kind of the end of the summer, time to, especially if you're up north, probably time to start pulling out those marshmallows and roasting them over the fire and having a great day, having a great weekend. Of course, we are coming up on the last great big 3-day weekend of the summer. Another page is turned, another chapter in everybody's life. Always seemed, when I lived up north, the weather changed so abruptly that it was always sad. I don't know if it was so sad because I knew I was going back to school, or the weather was going to be horrible, or I wasn't going to be going to the lake anymore and going boating. Just a lot of reasons that this time of year always kind of made me feel just a little bit sad. Of course, being down here, not a big change in the weather. In fact, the weather gets better. We are going to see temperatures drop off just a little. The ocean will become less like a hot tub and more like a nice warm bathtub. And we're going to see probably 10 weeks of just gorgeous weather, normally right into Thanksgiving, and maybe even a little longer if we're lucky. So always a good time. And over this 3-day weekend, hug your kids, roast a few marshmallows, and remember that we owe it all to those wacky Egyptians. It makes me feel like we need to get that guy with the arrow through his head back, Steve Martin, and start singing the praises of our wonderful, what was the guy's name? I can't remember. Tutankhamun. That's what it was, the 1976 King Tut. Anyway, we're having a good day out here. Market has finally decided to budge a tiny bit, but probably not a lot of what we were hoping for, in that it's kind of a muted move. I suspect we're going to see about 9:50 tomorrow morning fireworks on the text of Bernanke's Jackson Hole speech, and probably not much after that. I imagine we're going to have a few fireworks and then very light volume into Friday afternoon. Of course, we're knee-deep in fund buying the last 2-3 days of the month, the first 2-3 days of the next month. My guess is that no one in Fundville is probably going to be buying today or tomorrow. They'll probably wait and come back and buy Tuesday, probably Wednesday, on what they can get. And then we're probably going to see a market start to follow the path of least resistance through expiration. As always, you can give me a call at 877-927-6648, and we'll discuss your particular stock. But we'll have to think about what that would be. Nothing is safe. Has nothing to do with trading, but just a warning because it's happened to me. I was stabbed by a toilet, and here we are. I knew one day that, even though it was 4 years ago, that toilets can explode, and it's not the part you think it is. I actually leaned up against one, and a giant shard stuck in my leg, and I mean like an inch deep in it. These things are killers, so watch out for them. Of course, the FlushMate 3 pressure-assisted flushing system manufactured between 1997 and 2008, which is not the one I had. I just had one that was built weekly and leaned up against it, and that's all it took to burst into giant shards. But this one is being recalled because they literally do explode. So just everybody thought that was a fallacy. Those things can be dangerous. 14 people with major life-threatening injuries from exploding toilets. And this one has to do with trying to force the water in through high pressure. But I don't know. Just remember, nowhere's safe. They're after you. Earnings today, Sienna and Splunk. We'll take a look at those a little bit later. But we'll have to see. Of course, yesterday we had a little bit more in the way of earnings. Markets kind of started heading south when Japan retail sales fell more than expected. The Cabinet Office downgraded its assessment of domestic economy for the first time in 10 months on July 28th after shipments of the European Union fell 25% from a year ago period. Private consumption accounts for about 60% of Japan's gross domestic product. But you can see that 25% of your exports to a major bloc in the world are down. Gives you a good idea of the core temperature of the EU at this time. But the severe drop in Japan is probably going to be equaled all over the rest of the world. Sears, I knew thee well, dropped out of the S&P, or is going to drop out of the S&P. And the reason why is there's very specific criteria you need to meet to be in the S&P, to get in to begin with. And once you find out that the public float is well below the 50% threshold for inclusion on the index for, I think it's 3 months, it is no longer considered representative of the index. Float, of course, refers to the shares that are public and available for investors to trade. But Sears Holdings, see ya, don't want to be ya. Nice big pop down today. And it is going to be fairly interesting to see how this works out. But normally, I don't know exactly what day that goes out of the S&P. I'll try to check on the next break. But there is fairly good data that shows as soon as a stock comes out of the S&P, within a few days, normally it has a nice pop. A lot of these funds will have to sell it. And that's probably why you're seeing it getting hammered somewhat today. But they'll have to sell it, I think, within 15 days of it actually exiting the S&P. So there'll be pressure on it. But pretty good data that shows these things, after all the selling pressure is up, tend to get a nice little pop out of them. So, don't get too buried in this thing going and auguring itself into the ground right away. I talked, I think it was with Tom O'Brien a couple of months ago about the super high short interest in Sears that started off at about $78, and hedge funds putting a 10 and 15% premium to get these shares short from broker dealers. So no real surprise that this thing is eventually going broke. The question is when and where, and expect a little volatility why they take the long road to eventually being delisted and going bankrupt. But just about everybody on the market, there's none to, or at least the times I've looked at it, none to short. So we'll kind of take a look at their chart when we get in later. I had a question in the email, and of course, if you ever listen to my show, have a question, make sure to send me an email at path@tfnn.com if you can't call or you listen to this delayed later. But I had a question on what is the crack spread. I was talking about it, I guess, last week or maybe this week. The crack spread is the difference between the cost of crude oil and the price of refined petroleum products. Normally, they call it the 3-2-1 formula, and that is if you take 3 barrels of crude and you get 2 barrels of gasoline and 1 barrel of distillate, which means fuel oil like diesel or oil to heat somebody's home or any of that stuff. You basically put the gasoline the money you'd make off the gasoline and the diesel or heating oil together, and you compare that to the underlying cost of the original 3 barrels of crude itself. And that gives you a good indication of how much the refineries are actually making. But if you hear that, just remember 321, an easy way to remember it, and gives you the idea of exactly what it is. And when they talk about distillate, you know what they're talking about too. I always thought that was weird when I was getting started and listening to it, and I thought, what's distillate? There was nothing great like Wikipedia at the time, so I had to just kind of dig around and find it. It took me a long time originally. But, don't we live in a wonderful world where you can go right to Wikipedia and find out what distillate is today. One of the bigger things out here, and I'm not exactly sure who's going to end up with it, but there does look like some very good evidence that a cure for malaria has been found by a Cape Town, South African educational medical facility. They believe that they discovered a one-pill solution that killed the resistance parasites instantly. Animal tests have shown that it's not only safe and effective, but there were no adverse reported side effects. Clinical tests are scheduled to start at the end of 2013. There's probably in the neighborhood of 100 million people a year or more that die of malaria, especially in sub-Saharan Africa. Always a kind of an issue of, I think Bill Gates ponied up $100 million for mosquito nets. This would probably be, I don't know how expensive it's going to be, but this is going to probably, even for people that live, in Louisiana, places like that, going to be a big deal. Don't know what it's going to have effect on Canada Dry, the biggest manufacturer of tonic water. In the olden days, hopefully, or probably in a few years if this drug works out, they're going to be talking about just how tonic water worked. It's got quinine in it. In the olden days, you used to have to drink your tonic and gin and tonics all day long as a way of killing off the little beasties before they could get started. We do have a call, so we're going to go right to that, and that is Doug in Atlanta. How you doing today, Doug?
Hello, David. I was wondering your thoughts on AMD.
AMD has absolutely 2 problems, and I was going to bring up Intel today, but thank you for talking about AMD also. I don't know if you looked at Intel also.
I was comparing all of the chip manufacturers, and AMD seems to be doing the worst, and I'm not really sure why.
Well, I actually had them long. They had a very short window of opportunity where they could have succeeded. But they were using Taiwan Semiconductor to make their chips. Can you hang through the break?
Sure.
Okay, we'll be right back. But I was going to talk about Intel, too, so we'll look at them. I suspect we've got a little... I was thinking that this one, if this thing was going to bounce, it probably would have bounced yesterday. I brought it up on the show. But we'll get into this and AMD as we come back. We're talking with Doug, but you can call, too, at 877-927-6648.
Kate Stalter's exciting newsletter, Low Priced Leaders, has just launched, and now is a great time to get a 2-week free trial. Every Wednesday afternoon, Kate sends out her weekly newsletter to her subscribers where she focuses on small cap stocks with market caps under $2 billion, as well as low-priced equities with share prices ranging from $5 to $12. Kate tracks a variety of stocks with a combination of strong technical support and solid fundamentals. Many of the stocks featured will be recent IPOs. These newer issues are often some of the biggest price gainers in the market and provide an excellent opportunity for substantial gains if timed correctly. You can catch Kate Stalter live on Tiger TV with her Small Cap Roundup every Tuesday and Thursday at 11 a.m. Eastern Time, and visit TFNN.com right now to get your 2-week free trial to her brand new newsletter, Low Priced Leaders, while locking in the low introductory monthly rate of only $37.50 per month, almost a 50% discount. Act now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, Kate Stalter, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Millionaires are made every day. The fact is, living your dreams is possible. Someone, somewhere is going to get rich. My recommendation is, let that be you. Each day, someone is making the decision to better themselves and creating a plan to fulfill their financial dreams. Let that be you. The key to turning dreams into reality is to take massive action. Let that be you. I'm Steve Rhodes, co-host of the Money Master Show with Tom O'Brien, seen daily at TFNN, and I can help you with your journey to great wealth. I'll show you how to create the ultimate financial edge, a set of tools, insights, and strategies that are part of my daily newsletter service, Mastering Probability. You'll have direct access to me by phone, email, and my private library of trading and investing secrets for 30 days with an unconditional money-back guarantee. I'll take your trading to the next level. Click on my name, Steve Rhodes, on the homepage at TFNN.com and turn your dreams into reality. Mastering Probability, folks. Let that be you.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And as we come back, we were talking with Doug in Atlanta about AMD, and it's probably a bigger issue than just AMD. So I'm going to get into it a little bit. But AMD had a short period of time where they could have done extremely well, and with no fault of their own, Taiwan Semiconductor had a big issue, and that is that they are not able to build chips at the same die size as Intel. Intel is on 22 nanometer technology, on the way to 14 nanometer technology. I think right now Intel's saying that they'll be able, for the exact same chip, will be able to reduce the power consumption by about 35 or 40% by making it that much smaller, if it had the same amount of transistors. So the whole point is, can you make it smaller? The smaller you make, the less power it uses. And if you're talking about either laptops or mobile devices, that is the absolute huge thing to get, is smaller dies. And AMD made a chip, designed it, and couldn't get any kind of yield out of Taiwan Semiconductor on that yield, and that's when they started to break down. You just can't be 2 cycles behind on die sizing and still be able to compete. Intel, for even being able to do that, has had its own problems in that it really doesn't have a chip to compete with all these things going in the mobile devices. They are pairing up with Microsoft to do that, we're probably going to start seeing those new chips in their tablet devices and phones probably in the next 6 or 9 months. So I kind of would be much stronger on Intel than AMD, but AMD has one big problem, and that is they're known as a fabless designer. They do not build the stuff themselves, and they can't, of course, Intel's not going to build it for them. So who do they go to? They've got basically two places, Taiwan and another one, and neither one of them can get anything close to, I think, 28 nanometer right now. And, of course, everything from Intel coming out is at 22 nanometers on most of the chip, about half of it. So they still have a huge problem in that if a chip, even if it costs $10 more to work, if you get an hour and a half more time on a set of batteries for a laptop, it's a huge deal. Or if you can get 25% more talk time, or 30% more time on your tablet device, that's the big issue right now. And I think the other company that's going to have a hard problem in the future is ARMS Holdings, which does the design work. But everybody, including ARMS Holdings, has to go, when they design a chip, has to go to somebody else to design it. All of Apple's A5 and A6 chips are all built by Samsung. And Samsung doesn't have anything more than a very inexpensive process for building those processor chips. But Intel's the only one that really has 22 nanometers licked, and they're saying 14 nanometers in 2013.
Wow.
So, I mean, other than just the overall business, when I got it, I had this actually in my investment newsletter, and I liked them. They had a wonderful opportunity with their new chips. And when it became real clear after about 4 weeks of the Bulldog chips coming out that their yield was just horrible, that they weren't even getting it in 28 nanometers as effectively as they needed, there was no. And basically, I think it was 2 or 3 months, Intel was releasing their second generation i-Core chips, i7s, i5s. It was just blatantly, apparently good that, other than a handful of people that needed 22 nanometers, Taiwan Semiconductor just wasn't going to be able to provide that. So you've got Intel, a generation at least, or a generation and a half, in front of all these companies, and I think that Intel eventually is going to probably eat ARMS Holdings lunch just for that reason. But what is it? AMHM, I think, or HM, yeah. I typed it in wrong.
Are there any other fab houses around the world that might be able to come up to Intel standard?
Just the problem is you've got to be able to make something in the neighborhood of 50 or 60% margins, and if you're building for someone else, you're never going to be making those margins, right?
Right.
I mean, Intel's the only one right now, especially with their high-end chips, that can get and keep those kind of margins. And so you've got Intel just killing everybody with their design processes, but there's not that many people that need 22 nanometer technology other than very high-end processors. So I suspect that when Intel does come down the pike, that AMD and ARMS Holdings both are going to have problems.
Thank you.
Okay.
Tom O'Brien's daily trading newsletter, Market Insights, has delivered powerful results for subscribers, and now is the perfect time to try it out for 2 weeks absolutely free. We're so confident in the value Tom provides his subscribers in his daily newsletter that through Labor Day weekend only, when you sign up for a 2-week free trial to Market Insights, we'll send you a free copy of Tom's best-selling book, The Art of Timing the Trade, your ultimate trading mastery system, completely free of charge. Will even cover the shipping cost. Cancel at any time during your 2-week free trial to Market Insights and pay nothing, and keep Tom's free book as a gift from us. This offer is only valid for new subscribers. We've only extended this offer once before, and it will only be active for a short period of 2 weeks. So act now to take advantage of this great offer and be ready to capitalize on a more active, more volatile market once traders return from their August vacations. All the details are on the front page of TFNN.com. Sign up for your free trial to get your free copy of Tom's best-selling book today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and the Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
As Doug was leaving, I don't think he's on the line anymore. He had one question that didn't quite get answered before, and that is there anybody else that does what Taiwan Semiconductor does? And the answer is Global Foundries. Unfortunately, they were a public company. They've gone back private, eventually probably come out the other side. They couldn't keep up with Taiwan Semiconductor. Now they do a lot of smaller chip manufacturing for less highly integrated chips, a lot of 45 nanometer technology stuff that's very cheap. Chips that are $1.25, that kind of stuff. They are trying to get back into that super high-end and have had some forays into it, but still not the kind of company. And some of the problems that AMD had was with Global Foundries too. So the problem is that if you're making a small margin, can you afford to invest in the kind of factory to make 22 nanometer? And right now, AMD's margins are about 45%. Intel is making about 65% on average. You've got to have the kind of money that Intel has and margin, especially in the server processors, to actually ever justify building those kind of plants. Intel now, although they haven't said who it is, are doing manufacturing for 4 other companies that actually need 22 nanometer, and probably going to be not only a great manufacturing company for themselves, but others too, especially as they get into that 14 nanometer technology, why everybody's trying to go from 28 to 22. But a lot of these companies are spending the money in it, but they spend it rather slowly because, face it, 95% of the people are more than glad if they can get something at 32 nanometer or 40 or 48 nanometer for a lot of these chips that are commodities. Let's put it that way. They don't have to be small. A handful of products, mostly mobile, need extremely small technology to increase battery life, and that's basically it. And they're willing to pay up to get that technology for longer battery life and faster performance in the processors. But that's pretty much it. So anyway, what was I talking about when we were going? Again, you can give me a call when you want it, 877-927-6648. We'll be glad to talk about it. This is our long segment, so I'll finish up the news and we'll get into some of these charts. December for Samsung and Apple, the decision on whether or not Samsung will have some of its products barred from sale in the U.S. won't happen until probably about the first week in December. 57% of court cases in the Ninth Circuit area are overturned. I don't think this one will be any different. There's at least 10 different reasons why this court case should be overthrown. I said last week that, or actually I think on Monday, that I didn't think that the bounce in Apple would last very long. Anybody that has watched court cases know that especially patent cases like this are notoriously go on for 5 and 10 years as long as both sides decide that they want to continue spending money on it. And I suspect that HTC, another cell phone manufacturer, even after this ruling, has decided and stated now that they are not going to side with Apple. I suspect this is all going to get thrown out. We've got a wacky guy that was the head of the jury who has a patent himself, should have been tossed out of the jury pool for that alone. He also infected the rest of the jury with a false idea of what prior art was. Prior art is a technical term meaning has anybody drawn or shown or made something like this before you filed for your patent? I think at least in the movie 2001, you can say the first tablet was shown operationally. You can say that in 1997, Apple went and looked at a gentleman from University of Missouri in Columbia, Missouri, School of Journalism that had been working on it since 1981 and showed them a lot of the things like zooming in and out. You could then go to 2001 or 2 in a movie where they actually hired a gentleman to make a real interface exactly like we see now in most of the things in from the iPod on. And Apple didn't hire him, but he made an interface to show in Minority Report, a Spielberg movie. So I think that there's a monster amount of prior art showing that a lot of the interface ideas that Apple had were well out in the public domain before it happened, plus 8 other reasons. Jury misconduct. I suspect that they made a lot of mistakes on their jury form for awards that is probably going to get tossed out on that alone. And the judge in the matter probably was not as impartial as she should have been. I think they're probably going to get all those, if not at least 50% of those, as reasons to have yet another trial, and probably take it out of the San Francisco area where Apple home base is. So, I'm pretty sure that they asked, if I remember right, Samsung asked to have this moved to another district and got it resigned. A lot of times judges don't like to recuse themselves. we down here in Florida have an ongoing case that hit the national news. The judge didn't want to recuse himself in it, and normally this is one thing you don't, unless you've got a judge that's just horrible about it, you kind of just have to bite your tongue. Well, it was so blatant that the lawyer for the defense decided that he had to roll the dice, and did get the judge thrown off this rather high-profile case. It doesn't happen very much, but judges are loathsome to recuse themselves, thinking that they can be unbiased. Unfortunately, they tend to be the most biased of a lot of people that are in the courtroom. Everybody knows that they're getting paid on one side or the other. Sometimes the judges just don't know. Warren Buffett is 82 years old today. I've got kind of a love-hate relationship with Warren. Not that I've ever met him. But when I started first trading, he was telling me all the benefits of Coca-Cola and why I should be buying it. I noticed in the next S filings that he was basically selling that, why he was telling everybody on CNBC that they should be buying it. I knew that he was probably a guy that you could listen to on theory, but if he was telling you he was buying, he was probably selling, and if he was selling, he was buying. It's got a lot of country charm, fairly ostentatious. Has a lot of good quotes out there that you can use. I just wouldn't listen to him when he's talking about what he's buying or what he's selling. It has been, in my experience, self-serving. Anyway, wanted to get to a few other not news articles, but stocks before the end of the day. What was it? Today's the 30th, right? Okay. For some reason, I guess I didn't get these up. I wanted to look at STX today. I noticed that some of these hard drive companies had come off pretty high today. Just make sure that I didn't miss any headlines on this, and we'll be right back on it. Insider selling. Okay. Just looking at a few of these things. Okay, it looks like some S filings came out. Maybe the insiders are thinking that they hit a high. I haven't liked Seagate here for the last 10 days, and the reason why is it had gone over the May 1st high, $32.55 on 23 million shares. As we go through this high, 16 million, 8 million, 5 million, 13 million, up at the high, 13 million. This is normally where I say you want, in 3 days of it actually piercing a previous high, you want this thing to actually have at least the same, if not 95% at least the volume of the previous high to prove the point, i.e. that it is going higher and there's more people buying it. This thing had a fairly decent gap, an okay volume, but still looks to me like this thing wants to go back long-term back into the $27 range. We're seeing, I think, a kind of a period where Seagate had a perfect storm. That was the flooding in Malaysia, caused a disruption to their 3.5-inch disk drive business, along with Western Digital also. At the same time, they were buying up Toshiba's hard drive manufacturing and any other manufacturing they could, and a shortage. They were able to get margins up significantly. For an industry that was living on 8 to 9% margins on hard drives, that they were able to get up to 15 or 16% margins was something that probably maybe they could get up to 11 or 12 by buying out their competition. I didn't think that 16 or 17% margins would last all that long. And I suspect we're probably going to be coming back to earth and seeing Western Digital and Seagate bludgeon each other back down to the 10% profit margins they've had. Not a lot of volume here so far. We are back in that trading range. That was a good example of a false breakout. I think we're going to drift right back down into the, if the market does pull back like I'm looking, I think you have a probably good idea that we're looking back into the $27 range as that Western Digital, WTX, is it? Let me find out here real quick. Western Digital WDC. I looked at all these earlier and wrote them down, and for some reason they didn't make my thing. Western Digital, the same kind of chart up here, and you can see these things finally pulling back in. This one had a couple of dojis and now the drop today. Again, not a lot of volume. We might have one more move back up to 44.44, which is the previous April 26th high, 5.5 million shares. But we're solidly below that. The energy on this was not all that bad on the way back up. This one looks a lot better and actually has a better support at 38, which should be a lot better level than Seagate. But it came up and actually had a lot more volume on its gap up on earnings. I think the earnings were about 2 days away between these two companies. So as we look at this, this one would be the stronger of the two. But I think it's got closer support. But neither one of them just yet have volume, so we may have one more push back up, which is I'm suspecting Tuesday and Wednesday. Funds probably might get into these at least a little bit, and then we're going to see a little bit more of what we're looking for next week, and actually time to pull the trigger. This is kind of the first sign of weakness. Pandora Media on earnings popped up. This is another stock that had gone, its short interest over the last 45 days had gone almost up 100%, I think from 10 to 20 million shares. Is that right? Maybe it was 100 to 200 million shares. I'd have to go back and look at the news article. All I know is they doubled over the last 30, 45 days in the short interest in the stock. No big surprise this thing has busted up. Their losses were a little less than everybody expected with the heavy short interest. Not a big deal to see these things pop. I pointed out Groupon had the exact same pattern, GRPN, and my warning is on all these, what was it, 50% move on Groupon on something like that was fairly similar. They were expected to lose a lot of money, only were losing half that. They got a 50% bounce. We could see the same thing in Pandora Media, but to me, this stock isn't that much different than Sirius XM, which is SIRI, yeah. And we can look at a long-term chart on this. The problem is that any kind of broadcast has been somewhat problematic. Sirius, of course, once a super high flyer in 2004, 2005, starting to be killed off by the internet. And even though Pandora's been very good about getting both, I think, Toyota and General Motors to put Pandora in their cars, it's beyond me that people are going to actually pay for playlists of Pandora. I'd be much more interested in something like XM Sirius Radio that gave you a lot of news and talk radio and other things like Howard Stern's show, special interest that people might be willing to pay for. Straight music, you know, you've got your iPods already. It's hard for me to think that we're going to see this Pandora ever do well. In fact, there's a much better product than that already available. It's not out publicly as a public company, but we'll talk about it. It's called Spotify. We'll be back in a minute.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Time is the great equalizer of all mankind. Time doesn't care about winners or losers, who succeeds or fails. Time only cares that you played the game. Question: are you playing the money game? Is your money working as hard for you as you are for it? I'm Steve Rhodes, author of Mastering Probability, a daily trading and investment newsletter service, and we're celebrating our 1-year anniversary. In year 1, we generated a 30% profit. Plus, I provided 26 hours of live coaching to my clients. My daily newsletter service is available by 8 a.m. each day and covers the stock, futures, currency, and commodity markets, along with all the current patterns that you can trade. Each newsletter is packed with education, and it's yours for as little as $3 per day. And for the next 30 days, you can try it risk-free. Click on my name, Steve Rhodes, on the homepage of TFNN.com and begin your journey to great wealth today. If you're waiting for a better tomorrow, remember this: today's tomorrow will soon be yesterday, and your clock is ticking. Mastering Probability. Now is your time.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
If you were thinking to go long Pandora, I would recommend you maybe download and play with Spotify. Spotify is kind of like Pandora. I like it a lot better. It's kind of a social media edge to it, where you get things that you particularly like. You can follow other people that kind of put a program or a channel together that you can listen to this kind of music that they like. And it's kind of neat, especially some of the problems that I see with Pandora are the same problem with Sirius, and that is that you couldn't play 3 records back to back, or 3 songs back to back from the same artist. There is no problem with that with Spotify. I listen to whole albums, kind of like the days we used to when album-oriented rock was out. Most of these other things, you have to listen to 2 or 3 songs, and then you have to go listen to something else. Then you have to come back, and that's a Siri problem. And God. But anyway, do we have somebody on the line? Okay. But we'll continue to look at that. But I'd look at Spotify before you start thinking Pandora's big. I noticed that a lot of the people are pimping that on CNBC, and I think it is probably a short road. If you go back and look at the problems that Siri had are exactly the same that Pandora has, and Spotify does not. Anyway, what I wanted to get to was, before the end of the show here, was MCP. I had a question about that. MCP is bounced on news that they had manufacturing capabilities, i.e. that they're not just going after the extra mounds of earth that they had going through and producing rare earths anymore, but actually are digging in the ground and picking up new rare earth minerals out of the ground. They got hammered down on heavy volume not too long ago, and the reason is that they were basically running out of money. They announced that they will be doing a secondary. I didn't have a chance to go through it today. I'll probably go through it this weekend. But I would suspect until that secondary goes out that you can have a nice little pop on this on news articles. But again, a lot of these are going to be short-lived. This is a extremely heavily shorted stock. And could you have a huge move, another move up to $14 tomorrow? Yeah. Eventually, this thing's probably going back down to the $10 range until we see that secondary go through and get finished. And I don't think I haven't read the information on that yet, but we will. Had a question also on Sienna, which we will look at here quickly. And Sienna came out with a fairly bad earnings report, down on huge volume today, and looks like it's going back down to $11.44. We had Meek from Oklahoma called, but didn't have time to get him in here before the end of the day. What can you say? Sienna, the company is a solutions for switching, aggregation, management of voice, video, and data traffic on communication networks worldwide. I've said that almost all these companies have been doing very poorly, as a lot of people are looking at the Insera stuff from who's now going to be owned by VMware as the kind of new thing. A lot of these companies that are doing this kind of technology mix are finding a lot of the people really standing back from buying these products now. Just another one of these companies in the networking area that's showing additional weakness. I'd look at VMware if you were looking for a play in this. They look very well set up in this arena, but not Sienna. We will be back tomorrow.